time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
MDA, symbol MDA on the TSX, is a leading provider of advanced technology and services to the rapidly expanding global space industry. The company primarily serves the US and Canadian governments and has three segments: geointelligence, robotics and space operations, and satellite systems. The price of this stock has moved up and down this year, but is still up roughly 5% year to date at $665 and a market cap of $793 million. Moving to the income statement, the company releases Q4 2023 earnings on March 23rd. The company had strong revenue growth of 34% to $641 million. The strong revenue growth can be attributed to strong growth in its two segments, satellite systems and robotics and space operations, which grew by 157% and 60% respectively for the quarter year over year. Robotics and space operations primarily grew to its work on the Canadarm3 program, while satellite systems growth was driven by its Globalstar program, which was awarded in Q1 2022. Before I go through EBITDA and earnings, I will preface this by saying they are naturally lumpy due to the nature of the business, and a one-quarter increase or decrease is not a sign of a trend, especially in a contract-driven business like this. However, adjusted EBITDA grew to $39.9 million from $26.8 million, a 49% increase year over year. However, adjusted EBITDA margin did decrease from 23.2% in Q4 2021 to 21.4% in Q4 2022. Diluted earnings per share increased to 7 cents per share from 0 cents, just above break even. Comparing the full years, adjusted EBITDA increased 15% to $157.9 million from $137.1 million. 2022 had diluted earnings per share of 21 cents compared to 2 cents, obviously significant increase on GAAP earnings. The company still does have a strong backlog of $1.4 billion since it received large contracts for its work on the Globalstar low Earth orbit constellation and Phase B of its Canadarm3 in the first half of 2022. Since the initial jump at the start of 2022, the backlog has slowly shrunk by about $150 million, but sharp increases like this, then slow declines over time is expected in a contract-based business like MDA's. So moving to the balance sheet now. The company is unsurprisingly in a net debt position. MDA holds cash of $39.3 million and debt and leases of $251.9 million, resulting in net debt position of $212.6 million. The debt is floating at a rate of CDR plus 45 to 175 basis points, depending on the leverage, of course. And this results in MDA having a net debt to adjusted EBITDA of about 1.3 times, which is significantly higher than previously, but not unmanageable compared to last year. As well, they have hedged $150 million of their debt, resulting in $95 million of that being unhedged. So while interest rates will negatively affect if they continue to go up, MDA, I keep saying it, but MDA, they're not overly sensitive like you'll see some companies with this absurd amount of floating net debt. So, valuation. The company does provide guidance for 2023. However, I will preface this as well. The company's guidance for 2022 was expecting revenue of $750 to $800 million revenue, with it actually being just at $641, with adjusted EBITDA being on the high end of their guided range. So always take guidance with a grain of salt. They can just be completely wrong, or they can be right on. It's something which you want to really gauge management's past history. And in their case, they were wrong on the revenue, but they were correct on the EBITDA, which is a bit strange. Don't even see it actually the other way around, because revenue is generally easier to gauge. So for management guidance for 2023 or this year, revenue is expected to be between $750 to $800 million, with adjusted EBITDA of $145 to $155 and a margin of 19 to 20%. If this is correct, this would result in about 21% revenue growth, but slightly lower adjusted EBITDA for the year compared to 2022. And if you were paying attention to their guidance, that's about the same as their initial guidance as the previous year. So we'll see if they're right this time around. But this leads to the trailing price to earnings being 32 times, trailing EV to adjusted EBITDA of 6.6 times, and using the guidance midpoint, forward EV to adjusted EBITDA of 7 times. The valuation on the company is high given the muted growth in 2023. That being said, MDA in the long term does have prospects of high growth given the industry's growth, but at this time I would not be willing to pay that premium of a price. But we will continue monitoring the company going forward.
Awesome.
Yeah, quite a differential between the price to earnings multiple and the EV to EBITDA multiple. And once again, as an investor, it's your dividends your dividends are paid out. Not that this company pays a dividend, but like any benefit you get as an investor generally comes down to the earnings, right? Like that is the profitability for the common stock shareholders. EBITDA is a good measure of operating profitability, but that's not the profitability that accrues to the benefits of the common shareholders. So we're often asked, do you look at the price to earnings, price to cash flow, EV to EBITDA? We look at all the multiples because each one tells a bit of a different story, but really to us the most important metrics would be a price to free cash flow or price to earnings, assuming that the earnings quality of the company is strong.
Yeah, it's interesting. I had no idea that they were the company who initially made the Canadarm. I didn't know that. That's intriguing.
It's because you're 28. That's why.
I guess so. Almost 29.
It's probably part of it, right?
Probably part of it.
Yeah, it's true.
Yes.
Yeah. I just disclosed your age. Oh no.
That's
cat's
all right.
out of the bag.
No,
Jesus.
That's all right.
I think we've said something like that before.
Yes.
It's a good thing when you're under.
Yeah, exactly.
Yes, it is. We
20.
wish we were me and Aaron wish we were 28. Okay, so can we trade ages with you just for a sec?
Yeah, earlier this month. I mean, this is a bit of a tangent too. I just think that it's an interesting point because I just learned it as well. A part of the Artemis 2 mission, where we're finally going back to the moon here. There's going to be a Canadian on board that mission, along with 3 other U.S. Astronauts. So I thought that was kind of interesting that a Canadian is going to be going around the moon, not on the moon, but around the moon. Anyways.
What are you talking? We've never been to the moon. What are you talking about? Come on.
Whoa. Conspiracy.
And this Canadian
I'm kidding.
MDA?
I'm kidding. Yeah.
No, this guy, no, nothing to do with MDA, Aaron.
Are we talking about MDNA, MD, and A's, or MDA? I don't know. I'm not sure.
Ryan has just said
it got confusing.
MDA so many times.
I know.
Yeah. It's a reflex for us.
Yeah.